Hello, we are Team Messy Data and we're here to present our Shiny app for forecasting quarterly stock returns. The stock market plays an important role in today's economy, and trading has become an interest amongst many people. However, it is still unclear when the time is just right to buy or sell stocks for the best results. This app creates a tool that helps users in decision making by creating forecast graphs for each stock return. Our goal for this project is to build an app that allows its user to enter the name of their interested stocks along with choosing other fundamental indicators. Then the user can print out graphs and summaries of the quarterly stock returns. The tool allows us to fit a linear model using data from a stock's previous quarter and forecast the change of the following quarter. The one limitation we have is because of our limited background and inexperience in the stock market, we may have not made the best model to forecast quarterly stock returns. To improve this app, we can make the model forecast more accurately and also make the summary easier to understand for a user who is not experienced with stats. We can also make the interface more user-friendly and cleaner as well.
Now I'll do a quick demo of the Shiny app to show how it works. At the top of the app, the user may enter any stock symbol they'd like. For this example, we use Apple stock. For the graphs on the right, the top bar graph shows the actual percent change for Apple's stock by quarter. The graph below that shows the forecasted percent change by quarter. If the bars are green, then the percent change is positive. If red, then the change is negative. Also included is a line graph to compare the actual versus forecasted percent changes by quarter. Keep in mind that in order to see any changes to the graphs on the right, the user has to click Submit first. Right below where the user enters a stock symbol is a slider that adjusts the quarters to fit the linear model line. Then, for moving of closed prices, the user can either select Exponential Moving Average or Simple Moving Average. EMA gives a higher weighting to recent prices, and SMA assigns equal weighting to all values. Then the user can specify the length of moving average. After that, the user can decide whether or not they would want to include specific ratios. The free cash flow ratio is a measure of how well a company can pay off its current liabilities with the cash flow generated from core business operations. The PE ratio measures the relationship between a company's stock price and its earning per share of stock issued. The PE ratio is calculated by dividing a company's current stock price by its earnings per share. Generally speaking, a high PE ratio indicates that investors expect higher earnings. The PS ratio is a valuation ratio that compares a company's stock price to its revenues. The PS ratio, or price to sales ratio, is an indicator of the value placed on each dollar of a company's sales or revenues. It is calculated by dividing the company's market cap by the revenue in the most recent year, or divide the per share stock price by the per share revenue. The PB ratio is used to compare a firm's market to book value by dividing price per share by book value per share. Some people know it as the price per equity ratio. A lower PB ratio could mean the stock is undervalued. However, it could also mean something is fundamentally wrong with the company. As with most ratios, this varies by industry. Lastly, we included a summary of the regression model where the percent return of the stock is the dependent variable and output of the model. And all the different ratios are the independent variables and predictors for the model. And that concludes the demonstration of Team Messy Data's Shiny app. Thank you very much.